Welcome to the Trading Pit, your virtual gathering for all traders. Man, it's our first show of 2024, and I am so absolutely pumped up. The week's starting crazy. This year is going to be crazy. It's going to be absolutely nuts, and I'm so excited to be here. Now, on our last episode, we discussed how Bitcoin was consolidating. It feels like lifetimes ago. Bitcoin just went over 45K. Ethereum is above 23K. It feels like we're about to hear if an ETF is coming live. And that's what I'm going to ask both of my analysts today. I've got JJ, I've got Ben Lilly, two of my favorite folks. They're here today. We're going to be discussing the market. We're going to be asking if there's a trade. And we're going to be looking at what's going to happen next after this crazy action. I'm going to take down the music producers. It's a little loud. JJ, I want to hear from you, man. What is the mood of the market?
Approaching Euphoria. So happy New Year, everybody. Welcome back. Happy to be here.
Approaching Euphoria. Yeah. Is that how you're feeling after your New Year celebration?
I think this is it. I think we maybe have a week, maybe 2 weeks left of this pump, and this will be it. But there's a lot to get into.
Okay.
It's a good thing, right? Hey,
it's a great thing. It's a great thing. That's what I want to hear, man. I'm so pumped to be in 2024. Okay, so tell us, what does this pump look like? Walk us through the metrics.
So we see here on the daily chart, Bitcoin came down like we were talking about a couple of weeks ago, retested basically the 50 RSI perfectly and bounced from there. Basically, when we were at the lows a few days ago, we saw a lot of shorts piling in. And then we saw the bounce back effect pretty brutally here. If you could see this liquidation chart. So over the past 24 hours, we've seen nearly 50 million in shorts just wiped out.
Well, let's go back. Hold on. Let's go back to the spot chart. So you said we bounced off the 50-day. The volume, though, profile looks. I mean, if I look over the last, year or so, not on the perps, but on the actual spot, unless I'm looking at something wrong.
Yeah, this is Coinbase. So this is
Coinbase. Okay. Yeah. But look pretty mild, but it looks like more on the perps is where we saw some more action. That's where the shorts just got taken out.
Yeah, like when Bitcoin was failing a couple of weeks ago, like it was just chopping in range, like we were saying, just trying to draw in more liquidity because that's ultimately what you need to either get new highs or break down from the range. So what was happening is as we went to these lows, like you just see this consolidation, it was just bouncing back and forth. People were getting liquidated in both directions over and over and over. And then when we faded towards the lows, there was obviously a lot of short interest that came in at those lows. And that's what really gave the fuel for this leg up. Like you see here, when we started moving up, I don't know how much of this was actually buying, but it was kind of more driven by perps. Like we see 15 million in liquidations here, 15 million in liquidations there, another 10 million in liquidations. And this has just been kind of driving price into this current range. And now we have a clean breakout on the daily, which that tends to be good momentum for at least a week or two, right? Like I don't think it's necessarily going to reverse today, but I think we're starting to see those signs of froth. We saw the CME futures premium jump back pretty strongly here.
Well, so walk us through what signs of froth are you seeing that's you're adding to your cappuccino?
So we see the CME premium here. It's about $1,000 premium. So right now, if you just buy Bitcoin and short the CME perpetual future, you get $1,000 of free money. And then if you want to look a step further, you could go to the March quarterly contracts, and these are trading at almost a $3,000 premium. So you can just buy spot Bitcoin, short these March futures, and pocket $3,000 on a cash and carry. And we see it across the board here. We look at the funding rates. We just see how these have really jumped up here since Christmas, basically. And these are just reaching extremely high levels here.
Walk us through what we're looking through. This looks like something from Tron. Let's break this down for the audience. I may have a few questions here.
This is one of our in-house metrics. So it just kind of shows you an overview of the perpetual market. So we see price here. This is open interest levels, just your conventional open interest, liquidations like we were discussing before. And this is funding rates and predicted funding rates. So we see just kind of this massive spike here over the last week of December or so into now. And when funding rates are like, you see they weren't this high basically at any point through 2023. It was pretty muted. And now we see them rising. And I think a lot of that has to do with probably the cash and carry trade that's going on, a lot of the speculation over the ETF and whatnot. And typically when we see these things pop up in markets, that's kind of as good a sign as any. Not that we're at the end, but that we're approaching the final pump. Like who knows how high this goes over the next week or two if the ETF's approved. I'm not saying the top's in now. Could easily go above 50K within the next 2 days. But I think within the next week, definitely within 2 weeks, you want to start exiting positions if you've been long, or at least hedging. Like right now, you could literally hedge for free by shorting these March contracts. And you have that $3,000 of premium there that you can play with if you're a long spot. So this is the spot to begin de-risking, I feel pretty strongly.
Okay, so we're euphoric, but it's starting to get too frothy for JJ's taste. His cappuccino is a little bitter, I guess, or it's too much foam.
That's it. That's all you get. You had to, look at the past year. You have to. It doesn't go on forever. It's been like 8 consecutive up weeks, like just 3 months of nonstop going up. It can't last indefinitely. There'll have to be some drop back and consolidation at some point.
You're bringing us back down to earth, Ben. What's your take on the frothiness of this current market and some of the data JJ just shared?
Well, first off, Happy New Year, guys. Glad to be back. Glad to get started for this new year, and kind of just starting off with, unfortunately, a little bit of bearish news, as JJ alluded to. When I took some time end of last week and just a couple days ago, looking at the market, I came to a similar conclusion as JJ. A lot of the froth is there, and it might just continue on, but we're starting to see the first signs that the demand is starting to subside a little bit. We might be nearing kind of the end of this leg, this first big bullish leg of the market. Even on my timeline on X or Twitter, we're starting to see signs that a lot of folks have all-time highs for their portfolio. I mean, I can't count. I need multiple hands to figure out how many times I've seen that on my timeline. And that is an indication that, look, people are starting to think about taking profits. They're starting to trim down their portfolio. They're de-risking. And you can see it. You can see it on spot demand, especially. I think one of the charts that I put in Espresso, my kind of newsletter I put out a few times a week that goes over a lot of data and charts in the market, as well as macro and crypto in the same fell swoop, is the difference between the spot price on Binance and the spot price on Coinbase. And the reason that we can kind of look at the difference there is that Coinbase acts as like a fiat on-ramp. So you can almost look at that as new money coming in, that's fresh demand coming into the market. And then when you look at Binance, its pairing is USDT. So it's a crypto stable coin, which also means that money is already in crypto. So it's not fresh. And if you see that spread start to show up to where Coinbase is lagging on the spot price, that's an indication that the fresh money is starting to kind of subside a little bit. It's slowing down. And we see that starting to emerge. You're kind of seeing volatility in that price is probably a more accurate way to interpret it. Because if I were to redo it this morning, I bet you it's got a premium on it based upon the action from the last 12 hours here.
Okay. So
Coinbase is going to be like your institutional players in the US. Like they're not using Binance or offshore exchanges. They're going to be using Coinbase to on-ramp. So when you see the Coinbase premium dropping, that's probably as good a sign as any that what was driving the buying throughout the past couple months is no longer there.
Well, let me ask about sort of, you mentioned that shorts had piled in that allowed us to get some fuel to go above 45K. I'm waking up this morning to see where the markets were was interesting, especially because if for those listeners who had been there a couple of weeks ago, or maybe it was our last episode, we talked about how the Scrooge was going to come on the week between Christmas and New Year's when the institutions were away. It was more crypto native. Price action was pretty muted until last night. And then it sounds like, JJ, you're saying, hey, that was taken out by shorts. Now we may have some additional fuel to go higher. Where are we seeing longs pile in? Is the market getting overly directional at this point?
There's just a lot of open interest, like we showed on this chart. Like you just see the open interest and funding levels have been rising, which is a good sign that things are getting frothy. And you also see that like the March futures trading at 48,000 because there's so much demand to be long into this ETF announcement. Which doesn't mean it's necessarily going to be sell the news on the instant, but at some point, all like what drove this price up to a $3,000 premium on the March futures, when the ETFs announce, they're going to be deleveraging at some point in the very near future. And when they do, like there's a lot of cash and carry trades going on right now, right? So once they get that catalyst, they can close that out. Like as this starts to come back to par, and they're going to sell their spot and also close out the futures contracts. So there's just a lot of risk baked into the current price right now, which makes it hard to sustain.
Well, walk us through, because you walked through spot, you talked about perps. Ben, you talked to us about the difference in spot on different exchanges and what kind of pattern that can tell us. JJ, you usually talk about options. What are those telling us right now? Are those giving us anything from a tea leaves perspective on where the market may go next, or how that maybe the larger players are positioning themselves?
That's been a lot of the demand for the far end, like the March contracts and whatnot. Let me pull up the March expiration. So you see there's massive open interest at the 50K for March, for example, right? Mm-hmm. So the options market's betting strongly that there's going to be an ETF approval this week or early this month, and that's going to send price to new highs. So that's already being priced in to some extent. So that doesn't mean we won't get that blow off, but when we do, they're going to probably be looking to close out their positions there. We don't see a ton of downside buying yet. So there are, like you see the purplish lines here. The market's not really short, which is kind of worrisome, right? Is that there's nothing. What you want to see is almost like that interest providing a floor at some point, with just people buying protection. And there isn't really that demand for protection, which should kind of send up some alarms that we may be entering kind of a top period here over the next couple of weeks. Because sooner or later, people will need that protection. That probably comes after the ETF's announced, when people book profits. If they don't want to sell directly, they'll just buy some puts to cover a downside. And we haven't seen that yet, but I think it's coming here shortly. So this probably isn't a bad time to look to buy some protection on the cheap.
I'm with JJ on that. I mean, when it comes down to volatility, which is essentially when we say the word premium, when it comes to options pricing, the way that you figure out what that premium is this IV term, implied volatility. And so as implied volatility, which is a measurement of how much volatility the market is pricing into these option contracts, you can go ahead and see that, which each expiration date. And you can look at it essentially over time, right? Because that IV changes for a contract up and down over time. And so if we can pull up the chart that I have on my screen, kind of talk about what JJ is alluding to here. Let me share this tab instead. All right, the term structures. So this is implied volatility on specific dates. So we have January 1st, 2024 in the light blue. So that's the line on the top. And then you have the dark blue implied volatility line, which was about, 2 weeks ago, just about. And so the fact that the light blue line is starting to rise a bit means that the market is pricing in more expected volatility. And you can see a massive price surge right here, which is the expiration date that's closest to, that would have been yesterday. So that price surge that we saw translated to higher implied volatility. But the reason I bring it up is this is just starting to float higher here on expiration dates that are coming very close near term to right now. And so as that starts to float higher, this is an expectation that, yes, the ETF is likely, that decision will be made here in the next week or so. And whether it's a yay or a nay, that's going to lead to more volatility in the market, but you don't see anybody hammering it down right now as much as you probably would expect in normal market conditions. And so the way that they're going to be hedging is once that starts floating likely even higher, you're going to start seeing people kind of take the cream on that premium.
Mm-hmm. Yeah, it feels like the market's waiting for that final spike. And here's another good indication of that. Something that I monitor pretty often is the BVOL chart, and it's been extremely boring. So I don't think anybody else is looking at it currently besides me. But you see, it's just been in this flat pattern, right? Basically since the big drop off in August 22, it's just been nowhere. But this isn't Bitcoin's average trading range. Like that's what this shows us, is how wide Bitcoin's average trading range is on, say, a 30-day basis. And this looks like it's going to break out pretty strongly here. So what I kind of think is the mental map I have in my mind for it is we're probably going to get a spike up and then a spike down, which is going to send BVOL through the roof in 2023 or 2024.
So walk us through what that might look like, right? I mean, we already talked about price maybe surging above 50K in a short period, maybe a blow off top. What does that look like on the rebound as it starts to go down? And does this give us any indication on price targets, or is it really just directional on the fact that it would go up or down or kind of a rebound?
Well, if you know this kind of volatility is coming, I think you could probably anticipate what price would look like. So that might be a spike to like 48 to 52K and then back to 40. And that's what would really send BVOL surging, because all of a sudden Bitcoin's prices expanded to new highs and then it's dropped back down. It's trading in a $12,000 range instead of like a $3,000 range, which we've been in for the past month or so. So all of a sudden the average trading range, when you average out over 30 days, it's much wider. So BVOL starts to spike up. It would probably take out these March highs at least at 28. It's currently at 17. And then who knows? Like, I think 2024 could be pretty wild in terms of the price swings here. So just preparing for that. Like, if we do get a spike, pretty sure it won't be sustainable. Like, you look at all of these time frames, however extended we're getting. It's just been up and to the right since October. And sooner or later, like, it just catches mean reversion. That's just the way Bitcoin's always been. I don't think this time's different. And we're just going to slow grind up to 100K from here. I think we see it. There's so much speculation built in with these funding rates and the open interest levels that we're definitely reaching an unsustainable point here over the next week or so.
All right. Well, lots of signals suggesting that we're overheated. We're ready for some reversion back down, which could be good entry prices for people, right? If maybe you were sitting on some sideline with some fresh powder, this may be an opportunity to get into the market.
Yeah, it's absolutely coming. Like, you'll see the funding rates normalize, the open interest levels get depleted, long liquidations like we've been hunting, short liquidations nonstop for the past 3 months. So eventually that pendulum will swing and we'll start to see the people that were over leveraged long on this ride up get cleared out of their positions. And when they're forced to sell, that tends to be the ideal time to start buying.
Okay. All right. Well, I think you guys have done a nice job of summarizing your concerns with some data. For those who are listening live, welcome. If you've got questions, put them in the chat. We'll do our best to answer them. JJ, I want to come back to something we always talk about, which is the Dixie. We've talked many times about sort of its weakness. It looks like it's continuing to be weak. What is it looking like? And then I also want to get into the VIX, because I think I saw this morning that it appears to have spiked a little bit. So I want to know from you guys, are you seeing something from a macro level that may have some impacts on the crypto market?
I didn't have a chance to read about this yet, but Ben, you have anything about the yields? I saw that they were kind of ripping this morning pretty strongly, which tends to not be a good sign.
Yeah, I mean, there's been a lot of, I guess the bears are starting to come out of their caves and start banging on their drums and whatnot to say that we should all be fearful of the market. As far as what to interpret, I'm not entirely sure. Some are saying it's kind of like the end of the year reallocation of quote things. I'm not exactly certain what that could be, but as far as what's happening in the yields, the only thing that I can kind of decipher at the moment is you see, let me pull this up, is reverse repo market. That's been a pretty popular topic because what the repo market is doing is essentially collecting a lot of capital, a lot of money in the market.
Hey, Ben, Ben, just for the audience who's perhaps not familiar, can you just give us like a 1-sentence, 2-sentence description of the repo, how its impact, why it's used?
It's a way to get yield on your money. So for banks, it's the safest form of yield that you can get. The next safest form would be treasuries. So if you have a difference in what the Fed is willing to give you on an interest rate, like you take that if it's higher than what the 1 month is giving you in terms of a treasury. And so lately you're starting to see a spike in the repo market. And so what this acts as is almost like dry powder in the market. And we have been seeing a constant drain of late. And so this is acting as like a positive in terms of the net liquidity that exists in the market. And a lot of folks have been taking what the balance sheet is of the Fed. They go ahead and add this into the equation for the repo market. And then they also combine that with what the treasury account is at the Federal Reserve. And then they go ahead and create a net liquidity metric off of it. And as that starts to rise and be a net positive, that indicates that there's additional liquidity coming in the market, and that's a bullish sign. When you see this chart start to rise, that's actually pulling liquidity out of the market and putting it essentially in the Fed's pocket because they're giving enough yield to attract that capital. And right now, so if I pull it up, SOFR is kind of the rate, it's secure overnight financing rate. And let me get the right chart here before I start talking about it. Share this tab instead. This orange line here, I know it's hard to see, but if I make this a little bit bigger, this orange line here is secure overnight financing rate. This light blue, purple type of line is the 1 month yield on treasuries. And you can kind of see that SOFR is starting to go right up next to it. It's actually exceeding it at times if you were to pull a candle chart up and look at it. And you also see that the 3 month is starting to drop below. So if you're able to go ahead and get a certain yield with the most secure form of yield in the market, like where are you going to go? And so because of that, people are starting to, or banks, institutions, entities are putting their money with the Fed. And this is causing a little bit of change in the yields in the market. And I have to think that this big spike that we saw on the 1 month treasury has to do a little bit with what's going on here, because the yields are they're getting a little bit dislocated. And it has to do with, I think, the Fed telling the market that, hey, look, if you want to lock in these yields that we have right now, you better do it now because we're going to be cutting down the line.
Yeah, there's something seems not right. So that's kind of the feeling I'm getting looking at the Dixie. Like it got so oversold and we see it start to bounce back. Like this could just be like, it might bounce back and fail at these levels. You see kind of it moving, like how oversold it got over the past week or so. But when you add in like kind of the confluence that you see in the bond market and whatnot right now, there is, and what you were saying with the VIX too, there's just some, like, you get a weird feeling, and how overextended Bitcoin's becoming, it's just kind of sending off spidey senses that something may not be right in January.
Look, the takeaway, instead of like trying to read the tea leaves and figure out exactly what is this small little accounting change that might have happened that caused this nuance in the 1 month treasury, the end result is that liquidity is kind of getting drained from the market. Over the last 2 weeks, the repo market has gone from sub 700 billion to over $1 trillion in a very short time span. And so the fact that we see that alongside with what we kind of opened with was that, Bitcoin does have room to go higher. How much? Likely not that much. Yes, the ETF, if it does get approved, we'll see that move higher. You're going to see a kind of a deluge of capital come in momentarily, but is that going to be sustainable? Likely not. And then this kind of piles on to that viewpoint, that liquidity being drained. Yes, we might kind of be nearing a interim end of this first stage bull cycle.
First stage bull cycle. It's exciting times. All right. So I think everything is just saying you need to be cautious right now if you're short term. Obviously, if you're long term, you've got some opportunities in the coming weeks or months to continue to allocate, get some more exposure. But if you're doing more near term trading, you need to be asking yourself, is it time to be taking some profits off the table and regroup for when the risk reward looks a little bit better? Okay. So I think you guys have done an overview of the marketplace, and I think what I'm also hearing is where we think this is going to go next. Maybe a little bit higher next couple of weeks, even a month. I think one of my takeaways from these conversations is that timing's tricky. So let's not try and pin it down. You need to stay flexible. Ben, you just wrote about that in one of your nice espresso articles. But we don't exactly know. But I think the momentum is moving in that direction. But the next question I have is, where is the trade? Is there a trade that you guys are looking at right now, even with that, with everything that we talked about and talked about being a little bit cautious here? In fact, I did have a question I want to ask from the chat. Comes in from JB's channel. What do we think about ETH? If BTC has a correction, do we expect ETH to follow, or is it going to show some strength?
Yeah, ETH will definitely follow. I don't think there's any world in which it's uncorrelated, right? So if Bitcoin falls back down to 40K, I think you expect ETH to fall back to like the 2100 level or so. And if it's deeper than that, I think we could probably get a chance at like 1700 to 1800 ETH or so. But I don't think it's going to be uncorrelated. So if Bitcoin does correct, you'll definitely see ETH follow, in my opinion.
Okay.
But at the same time, if Bitcoin gets that blow off, ETH has a catalyst to move towards like 2800 or so within the next couple of weeks as well. So be aware of that.
Ben, anything to add to that?
Yeah, I mean, when it comes to the ETF news, I think ETH is finally going to show its hand whenever that does come. Is it going to be a wick down because the amount of capital that Bitcoin is going to garner on that news is going to be so outsized in the market that the ETH BTC trade just kind of capitulates? If that's the case, that is a nice entry if you get it. On the flip side, if that news hits and you see ETH BTC start to surge, that's almost as well as an indication that, look, this thing's starting to gain momentum, gain strength, and people are understanding that, yes, this means that an ETH ETF is going to likely coming down the pipeline. And so that conversation is going to start to get strength. And I don't think you necessarily need to time it to a T, mostly because the way that ETH is getting locked up throughout the ecosystem, the supply growth that's taking place on that token is very low and negative at points in time. And right now, you just don't have as much activity. And once that activity starts to come back and you start to see a lot more activity come back to ETH in general, like it's very poised to have a very fast growth rate in terms of its price. And I would not discount it. Yes, I know Solana has done great.
I was going to ask the Solana in the room.
Yeah, I think in August we first talked about it and we said, look, this thing is ripe for a bounce back. And I forget who was dropping us clips last week saying, hey, you guys were talking about it. And it's like, yes, but this is more of like a price technical type of movement, not necessarily fundamentals. And so when we look at ETH and it has fundamentals, once it starts to show it on the technical side, on the price side of things, you're going to have two things that are going to be a really good recipe for price appreciation in 2024.
Okay. So we definitely don't see ETH, it's going to continue to act as BTC acts. So we see a correction on BTC. Definitely expect the ETH to most likely to follow the same course over a period of time. And I guess that leads to my next question. So some of the trades we talked about on the previous episodes for those who are here, and if you're new here, you'll know that every week we're asking the same question: is there a trade to be looking at? We've talked a lot about Grayscale in the ETH trade. JJ, you've talked about that. I think one of the episodes, Ray was sharing ideas for where to find some fundamentals for projects you could invest in. I guess I want to come back to that. JJ, put you on the spot. Is that ETH trade, is it time to close it, or are you still riding that for a little bit?
I think you hold that until we get the ETF news. So it's trading at the highest it's been since April 2022 now. So before even Luna collapse. And you just see it's continued to grind higher here. This is the ETH chart. So it's been solid. I see no reason to close that. You could just short it against ETH futures. You still have that discount to premium or discount to net asset value if you're buying the ETH. And if we do get that blow off top, then you have allocation, right? So I think ETH could go as high as, say, 2,800 to 3,200 in January if we get that blow off. So I think ETH is a good way to position for that. If you wanted exposure otherwise, you could also just hold spot Bitcoin and short those March futures, which are still trading at like a $2,000 premium now. It's dropped off a little bit, but that's free money as well. You just do a cash and carry in that. And this way you have some exposure to the market. You're not totally sidelined if you're FOMOing, but you're also protected to the downside as well. So I think that's, if you don't have a position, those are the only ones I'd recommend now, because I do think we're getting really overextended here into early January. Otherwise, just sit on your hands and wait for that liquidation run that'll be coming.
If you listen to this whole episode, you didn't take away that we think we're overextended, I'd ask you to re-listen to it a little bit louder. Ben, what about you? Are you looking at the same trade or something else?
I'm starting to look at something else. I mean, Benjamin, he's kind of heads up the trade desk, and he's built a really strong screener of late that takes into account when things get overheated. And just because things are getting overheated doesn't mean you just go ahead and sell your spot Bitcoin or sell your position or start shorting. If anything, your strategy just starts to change a little bit, and kind of, if you view it more as like hedging, then you can go ahead and still take some of the upside that's still to be had in the next couple of weeks. As far as what I'm kind of looking at is a little bit more of a general viewpoint on the screener mentality, which is look for tokens that have excessive funding rates on one direction or the other. And when it's just because his funding rate is starting to be elevated, doesn't mean that that's should be a target for you. You need to take into consideration, how much open interest rate is there? How much volume is there when it comes to this asset? This was something that Benjamin was really explaining to me. And there's he has a handful of algorithms that go ahead and start to showcase, which assets are either showing bullishness or bearishness. And then you pair that up with how much volume, how much open interest rate, how much funding rate do you see? And then you can go ahead and start targeting just a handful of assets to go ahead and hedge, right? That's the key word there is hedging it, because you don't necessarily need to open up a full-on position to short it. If anything, you can almost act as like this delta neutral position where you see maybe this alts layer 2 assets start to go sky high. You see that the funding rate is getting excessive. You see there's a lot of open interest rate as well, and it's due for a bit of a correction. So you go ahead, if the market decides to blow up higher because the ETF news hits, great. You can go ahead and nail that on your Bitcoin and other positions. But if that asset starts to correct like it likely should, you can go ahead and ride it higher. You can hold that position longer. But then once it finally does correct, you can go ahead and start to take in on that profit.
So, okay. So you talked about the screener. I'm gonna pin you down. I'm going to ask you, do you have something specific that you're looking at? Because you talked about a nice framework, which I think is great for the audience. But I know they're asking, are you looking at something specific? Is there something? I think I may have seen Cardano up there, one of our favorites. I think one of the ones that always gets flagged. But are there any specific assets that you're looking at?
Specifically, let's see, just looking at the most recent one, I see Celestia up there. I see Avalanche up there, INJ up there, Bake, FTM.
And when you say up there, you mean they kind of look like interesting projects to evaluate right now because of the metrics you just shared by the framework?
Mm-hmm. Yeah,
right.
I mean, they're just a way for you to start filtering them down now that you see that flash up on the screener. Now you go ahead and you take a look at those assets and see if they're kind of fitting whatever your framework or strategy is in the market. Like
okay.
They're not strong, right? These aren't really strong indicators right now. We're not seeing that at the moment. These are like mild bearish type of indicators today. And this type of stuff changes for us like on the hour every
yeah.
So it's not the long term, which everybody is probably more accustomed to me talking about. This is trading mentality type of information.
For those who don't know, Ben Lilly's New Year's resolution was to talk about everything on the 1 minute candles. He was told that it was time to start thinking a little bit near term. No, I'm kidding. Okay, so here, listen, I'm going to summarize it here. There's a lot of reasons to be cautious right now. If you haven't been in the market, this is okay because you're going to likely see a pullback, good entry points. If you are in the market and you're thinking shorter term, this could be a good time to be taking some of those profits off the table, waiting for another point to get a re-entry because, again, we're seeing a lot of froth. And even now, JJ just gave one idea for a trade that, as he said before, it's like picking up free money. A couple different ways you could do it, either with Bitcoin or ETH. And Ben gave me a framework to look at some projects because even in this crazy volatile times, there could be opportunities. So I think that's going to take us to the end of the show. But since it is the first episode of the new year, I want to ask you guys, what is your New Year's resolution, your real New Year's resolution for trading in 2024? Ben, I'm going to start with you.
What is my New Year's resolution for 2024 when it comes to trading is to make a trade that I had considered days in advance. So just practicing patience, understanding that FOMO can take advantage of any seasoned trader. And just understanding that, look, if you didn't look at it 2 to 3 days ago, don't try to form a thesis in the next hour because you're already going to be biased.
Oh,
so
I like that. Being methodical, thinking through your own framework and having that framework. And we've talked about that on previous episodes. So if you're new to us and you're curious about how we think about that, there's a lot of episodes in the channel worth evaluating. JJ, what is your New Year's resolution for 2024 as it relates to trading?
Bet more.
Bet
just
more.
kidding.
Oh, yeah. Love it.
Irresponsibly long over there.
Yeah, irresponsibly long. Yes.
I think you just wait. Like, I'm just going to be waiting for the perfect setup, which I think is coming. Like, I don't think you have to overtrade this. I think it's going to be painfully obvious when the bottom comes in over the next month or two. I think we'll see a pretty strong bottom in Q1. And I think you just wait for that, size it correctly, and then ride the trend up through the rest of the year. Because I think it's going to be a bullish year overall, but there will be some turbulence ahead. And I think you just wait for that fat pitch and knock it out of the park.
Okay, we got a lot of analogies there. I like it. So I think it's about being calculated and patient. I want to say I think I remember a tweet from an old OG Kobe who talked about, I think, playing video games during the day so he could get his mind off trades. It was really just a tactic to distract himself from trying to rush, I guess, to be more patient. So if you're out there, I'm suggesting Call of Duty. That's really what I'm trying to say. Although I'm more of a Super Mario's fan, I think that dates me, but that's the way it is. Guys, I think that's going to do it for today. I appreciate you guys being here, walking through everything. This is going to be a crazy year. For those out there who joined us on live stream, we're going to be trying to do this every Tuesday, every Thursday, same time at the market open, to be covering what's happening in the market, what you're seeing. Ben, Lily, JJ, thanks for joining me today. I'm going to be having you guys back many, many more times as this market gets a little crazy. And with that, we're going to wrap it up. This is Marconi White signing off.